And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick here with Katie Greifeld, taking you through to that closing bell with a global simulcast that starts right now. Carol Massar and Tim Stenovec back from vacation. Welcome to our audiences across all of our Bloomberg platforms, radio, television, our partnership with YouTube, here on a day where we're seeing the broadest base rally in U.S. stocks since at least late May.
I so love when you are jealous of something that we do.
I am. I saw your Instagram pictures on the beach.
We missed you,
I thought you were supposed to be
Romaine.
working.
We missed you.
We were. There's nothing about like talking about the markets and investing and doing it in front of the ocean, right on a beach.
It doesn't get much better than that. But we are back here, and we are closely focused on everything happening. And really, Katie, looking for the next kind of inflection point, at least for investors and traders. And we're squarely focused on Jay Powell next week and what the dot plot says and his answers to questions. I think there will be many.
Yeah, absolutely. You, of course, get the 2 p.m. decision. Then the real action starts at 2:30 p.m. when Jay Powell actually starts speaking. But, I mean, you think about the CPI that we got this morning, taken in combination with what we got from PPI and the labor market that we have been focused on. It feels like, again, September's a lock, and increasingly the next two meetings, too, maybe.
Yeah, and that seems to be the real story here. It's not so much what happens in September, but the idea of the market now pricing firmly in the chance of 3 cuts this year and maybe as many as 6 cuts as we head into 2026.
I would just say, whoa, slow your roll, everybody. Let's wait to see what Jay Powell has to say, because I feel like, you know, I don't know, it could change dramatically.
Absolutely here. On this September 11th, we are getting the closing bells in New York. I just want to take a quick look there at the New York Stock Exchange. Angel Studios, this is an independent studio company behind a lot of the religious films like Sound of Freedom. They're going public today and ringing the bell at the NYSE. And over there at the NASDAQ market site, you're taking a look at the leaders of Cantor Fitzgerald, ringing the bell here on what now has become their annual charity day. Cantor Fitzgerald and BGC ringing the closing bell there on a day where we're getting record highs across the board. The Dow Jones Industrial Average at a record high, up more than 1% on the day. The S&P 500 up about 0.9% to a record high. The equal-weighted S&P also at a record high. The NASDAQ Composite, the NASDAQ 100 at record highs as well. And take a look at this. The Russell 2000 outperforming in a big way, and now barely a percentage point away from reclaiming the all-time high that it set all the way back in 2021.
Pretty remarkable. Makes me wonder how much of the Fed rate cut that everybody's expecting next week is already priced into this. I'm going to go back to the S&P 500, Katie. Most names in the index today gaining ground, 436 to the upside, only 64 losing ground.
Similar story when you take a look at the sector level as well. Almost a perfect score, 10 of 11 in the green, and you can see that circle is incredibly green, leading gains today. Materials, a sector we don't often see at the top of the leaderboard, but Dow Chemical in particular had a good day. Healthcare, consumer discretionary also big up there. Your lone loser, energy, but even that barely in the red.
Before we get to the gainers and decliners on the day, I'll actually start with the big gainer, and that was Rent the Runway, a 30% pop in the shares. But that's now moving lower in the after-hours trade. The company reporting revenue for the most recent quarter of about $80.9 million and a loss per share of about $6.55. I need to get you some comparisons here, but we should point out they are providing guidance for the current quarter of 82 to 84 million, which looks like it might be just a tad bit light than what the street was looking for. The shares pulling back just about 5% here in the after-hour session.
Right, but as you said, a gain of 30% in the regular session, so quite a different tone here. Hey, I'm going to get to some of the individual gainers. Got to talk about Warner Brothers Discovery, guys, up as much as 37%. Popping on the news that Paramount, Skydance said to be getting ready for a bid to buy Warner Brothers Discovery, a mostly cash offer. Lucas Shaw and also Wall Street Journal pointing this out initially. So this is your number one gainer in the S&P 500. So some outperformance there, finishing the day, Warner Brothers Discovery with a gain of just shy of 29%. Another top gainer in the major indices today, Synopsys. This one, a gain of almost 13%, up for a 7th day, rallying after Citi and Miller Tabak highlighted potential upside. Forgive me. Let me go back to Synopsys, top gainer in the S&P 500. Got a lot of crazy notes because things are moving around today.
Just try to shake the sand off your paper there.
Out of my brain, too. Application software company. It did drop nearly 36% in yesterday's session. That was its worst single-day decline on record due to U.S. export restrictions, contributing to a slowdown in China. So investors coming back into this name today, again, up about 13%. And then this one, Micron Technology, rallying about 7.5%, again, an outperformer in those major indices. Citi and Miller Tabak highlighting potential upside when the company reports earnings on September 23rd. They touted the chipmaker's growth potential in the data center market, where AI services have stoked demand. We know that story. Citi, by the way, boosted its price target, Tim, to 175 from 150, saying the company would guide well above consensus when it reports on September.
And just real quickly, two honorable mentions. I just want to point out Figure Technology, the fintech going public today, had a great day on the street, up 24%. And how about Open Door, Tim? I know you've been following that. It's still a relatively small stock, but the founders are returning to the board here. 70% pop in the stock today.
Can I just say this is why my paper was a mess? I had Open Door and I had Figure, and then I had to cross them out because
no excuses on this show.
Anyway,
you got to make the choices. For
I know
what
it's
we're
hard
doing for
sometimes.
gainers. That's okay. On the decliners side, easy picks for the worst performers in the S&P 500 today: Oracle and Netflix among them. Oracle down 6.2%. You know what? Yesterday was its best day since 1992, up 36%. In fact, just since those earnings on September 9th, 2 days ago, analysts raised price targets. 23 analysts raised price targets by an average of 35%. Still up 86% so far this year. Not really putting a dent into this performance yesterday and this year. But the worst performer in the S&P, down 6.2%. Netflix, Carol mentioned the Paramount Skydance Warner Brothers Discovery potential marriage. Watching Netflix in the wake of that, because Netflix and YouTube and just streaming in general are a major driving force in spin-offs and consolidation that we are seeing in the media industry. Essentially, this would be to better take on the streamers. Netflix taking a hit as a result. Shares did move lower after the Wall Street Journal did report this out. Netflix down 3.5% today. And finally, Delta Airlines taking a little bit of a hit on the day today. This as the company said that the front of the cabin is performing well, but still seeing some laggards when it comes to the main part of the cabin, Romaine.
A big after-hours mover right now is Adobe, that company out with earnings. The shares, the knee-jerk reaction is to the upside. The company saying that in the most recent quarter, revenue did come in slightly above guidance, $5.99 billion. A similar story for EPS, $5.31. The street was looking for $5.18. Here's your forecast going forward for the full fiscal year, which basically just includes one more quarter. Revenue of 23.65 to 23.7. That is a slight raise in guidance from the previous outlook that it had provided. Similar story for digital media revenue, as well as the digital experience revenue. Digital media revenue for the fourth quarter, the company says 4.53 to 4.56 billion is what to expect. The street on average coming into today, guys, was looking for 4.51. That means the lower end of the range is above the average of street estimates.
And you can see shares flying right now as we have up on the screen. This is a story that needed to happen for Adobe. Shares down about 21% coming in to today's print year to date. And as we've been discussing, Adobe has become sort of the poster child for being left behind on the software side when it comes to AI and hardware. That's probably Apple that has that crown, but Adobe may be climbing out a little bit from that hole.
A little bit of commentary. The company's saying in its release, given our customer strategy, AI product innovation, and strong go-to-market execution, we're pleased to once again raise our fiscal year 25 total revenue and EPS targets. So that explains also why you're seeing investors pretty excited as well. Stock up about 7% here in the aftermarket.
Yeah, Dan Dern, Executive Vice President, CFO, echoing the comments from Shantanu Narayan, the company's CEO, saying that they're raising their fiscal year revenue and EPS targets. They're executing against a growth strategy to deliver category-leading and AI-infused solutions to meet the diverse needs of our customers. Shares taking a surge higher today as a result. But, you know, wait for the call, wait for more details, of course, too.
We will indeed.